Welcome everyone. Tonight we will share the topic save income tax. Number one thing, understand the payroll. And second one, how we can optimize our RRSP. So we are going to do some tax planning strategy for the tax year 2022. We are already in 2023, and everybody will know that by the end of April, we need to file our income tax for the tax year 2022. So tonight, we have three major topics. Number one, what are the salary source deductions from your payroll? Number two, how to get tax refund by using RRSP. Number three, what are the investment choices for RRSP? So today we also do it as a workshop. I will give you the strategy, and later we will have a Q&A section. So what are the source deductions from our payroll? A lot of people share with me, say, well, my boss told me I'm going to get paid this amount. By the end of the each month, I realized that the net income was so little, where the money goes, right? So first of all, I would like to share with you the income tax table. On the left-hand side is the federal one. On the right-hand side is the quickback one. So from here, you will look at the columns. You see the income growth, then you will also see the percentage growth, right? So it's more like the stairs. When you earn more income, your tax bracket will move to another ladder. The same in Quebec as well. So when we file income tax, we will know, okay, if my earning is in this range, then federal tax will be 26%. Also, on the Quebec tax will be another 24%, right? So this is a quite high tax bracket. And source deductions. So let's look at an example. For example, you sign an employment agreement, and in that agreement says that your annual gross salary will be 60,000. But at the end of the day, you realize you don't have that amount of money to spend. Why? The reason is that we have many source deductions. So this will show in your pay stub. Whoever earn salary income, you'll be able to see, wow, so many deductions, such a long list, right? So in Quebec, on the left-hand side is the employee's contribution. On the right-hand side will be the employer's contribution. What are those items? You have unemployment insurance. You have a QPP contribution. You have a QPIP for the parental leave contribution. So those are the mandatory. Of course, according to each person's income level, the federal tax and Quebec tax will be source deducted. And then after you receive the money deposited into the bank, you realize a lot of money you haven't even seen. They already go to different places, right? And let me help you to look at this table. If there's no tax planning, how much tax this person will pay? Let's say the person's gross income is 60,000, only salary income. He doesn't have any other side business, doesn't have any other like a passive income. So it's a very simple, right? And we will see federal tax 5,644, provincial tax 7,000. Altogether is more than 12,000. And on top of that, we saw there will be unemployment insurance, QPP, and also QPIP, right? There's another 3,800. So after all the deductions, 16,000, what are the net income the person can bring home? After tax income is 43,000. So we can see this person's average tax rate is 21% and marginal tax rate is 37%. So the question is, shall we do something? We have already paid so much money. Can we get some tax refund after like we file income tax, right? So here is the summary of what we saw earlier. That's the table, and here is the summary of the tax result without any planning, right? So the take-home income, 43,000, pretty much it's just like a 3,622 per month. So consider the inflation, consider the interest rate rise. A lot of people feel quite tight when they say, well, I already have this little disposable income, correct? And then we say, well, with all those deductions, you also feel that, well, there's a lot of money you work hard for, but you not really see them, correct? So how to maximize RRSP? So now it's RRSP season. The reason we put the webinar together, because by the end of February 28th, that's the deadline, and everyone should already take action upon this RRSP strategy. And we would like to show you how to optimize your tax refunds each year. Let's say this person has the contribution room 10,800. Then we would like to know how much tax we can save for this person. Very simple. You see the green big number here is a 4,000. So you see the person's take-home income is only 3,600. When we do the strategy like this, and we can save pretty much 1 month's income for this person, right? So often people will say the money saved is the money earned. So we can help people to get more money to put back into their pocket. So here with the tax refund, we'll see there's many results. At least we help the person to get more tax refund. The second one, we can also help them to decrease their average income tax rate and also marginal tax rate. And the result is that the benefit will be very immediately, right? Also, when they file income tax, they will bring this 10,800, the receipt, go to the accountant, and they will help you to deduct your taxable income from 60,000 to 49,000. So the taxable income reduced, the tax rate reduced. The combined effect is that we help the person to save 4,000 income tax for this year. And for this year, when the person get, let's say, extra refund 4,000, what can the person do? They can use the same amount of money to contribute to tax-free saving account, RRSP, and so on. All right. Or even they can spend this money for the very nice vacation too. So where to find the contribution rule? A lot of people say, well, I would like to do this strategy, but we need to understand and know what is the maximum amount we can contribute each year. So we often ask the people to say, well, pull back the notice of assessment from Canada Revenue Agency. Usually on the third page, you will be able to see this table. So what's the most important one? You will see there's many calculations, but at the end, you will see this amount. Your RRSP deduction limit for this year. So this is the amount that you can use, okay? If the previous year, the person never used RRSP, and it will be accumulated. And then next, the third topic, when we open an RRSP account and where we should invest our money. A lot of people say, well, the bank told me to open an RRSP account. I just move my money from my saving checking account to RRSP, but all sitting in the cash fund. So we say, well, if sitting in the cash, we could not beat inflation, right? Because the cash doesn't really generate extra income for you. We need to select the good investment tools to help you to grow your income. So one thing I would like to highlight is that the type of account doesn't mean the investment products. So that's why we often heard the people say, I have RRSP, I have a tax-free saving account. But when we ask them, what do you invest in? What's the rate of return? They say, well, to my understanding, I'll just put the cash there, right? So here is the next step. You need a financial advisor to help you to select the good places to invest your money and grow your money. So before we go there to see the investment choices, I would like to give you a whole list of the accounts. So we don't get confused. Oh, this account, that account, what does those account really means, right? Here's the complete list that you can open the account in the bank or in the financial institution. So number one, when we landed in Canada, we all go to the bank, deposit our money, we open checking account. We have extra money to save, we put it into the saving account and use it as an emergency fund. Other than those like a cash flow, inflow, outflow every month that we spend the money from there. And then we also have extra money that we don't need to use them, let's say for 1 year, 3 years, 10 years. So then what we shall do, we will invest them, right? So those are the account types. RDSP, D stands for disability. RESP stands for education for the children. RRSP, you save the money for your retirement. Then tax-free saving account. Next week, we will explain this account. And it's really like a very good account for everybody. Why? Because you can use this for short-term, medium-term, and long-term investment. The great thing is that it's no-brainer. Why? Because it's the best tax-saving tools. Whenever the money you grow inside this account, you withdraw at that moment, zero tax. Then also, if you maximize all the other accounts, you still have extra money, you can put it into the non-registered account. So this is a pure investment account. Okay, so those are the account types. If you just put the cash in that account, you don't invest to the funds, mutual funds or stocks or bonds, it means what? It's just the cash. Yeah, the money doesn't grow money for you yet. Now, let's look at the investment choices. I'm going to give you the whole list of the possible investments, okay? So you put it into the cash, no investment. Some people buy GIC. You can purchase government bonds and corporation bonds. And the blue portion is the where we can help people. In the bank, people put the money into mutual fund. Into the insurance companies, we put it into the safer portfolio. Segregate fund means what? Guarantee the principal upon maturity and upon death. Of course, you wouldn't able to buy like a whole life or critical illness into your RSP. However, I just like to mention that even though those are the insurance products, but they are saving and investment tools for you, and they can also save income tax. But it's not, those holdings are not able to put into the RSP. Just would like to highlight that, okay? And on below, and a lot of people, they want to buy stocks, they do foreign exchange, option, future, hedge funds, and derivative as swaps. When you go lower, most of those investments are the institutional investors. They have the knowledge to how to say invest to the hedge funds and swaps and so on, because people need a lot of investment knowledge to be able to do so. And a lot of like people like you and me, maybe they just do like stocks, okay? So those are the investment choices. And now I would like to share with you where we will help you, okay? How our segregate fund looks like, okay? Those are the major places we help people to put your savings, RSP money or tax-free saving money. So for example, here's a client, age 40, Mr. John. He say, I'm going to prepare for my retirement now. And at this point, he has a lump sum of 100,000. If he would like to put into his investment account, and then we put it into the segregate fund. The segregate fund have reset functions, means what? We can help the client to lock in their profit when the market is bull market, right? For example, the first 10 years, the market price value increase. The guarantee value can be locked on the 140,000. And the following years, let's say it's a really bad luck, the bear market. At the age of 65, the fund mature, but the market value is only 75,000. However, because we have the maturity guarantee, for example, this person took 100% guarantee, and his guarantee benefit will be 140,000. If that day he say, I need to, redeem all my money, the market price is 75,000, then the insurance company will top up the difference. So eventually the client will get 140,000. So this is why we say, well, segregate fund is a very good investment choices for the clients. And then we'll say, well, how we can grow our RSP, our retirement portfolio. Let's say this person is very disciplined. Every month, put in $500 into RSP. He continued to do this for the next 30 years. And the average rate of return is 8%. Now you can see how his retirement funds can accumulate, right? Let's say the first 10 years, it become 90,000. 20 years is around 300,000. And then the money keep on compounding. At the 30 years, it will be over 700,000. So why you can see the investment grows in this way, because we would like to share with you the wealth formula. The wealth formula equal to the money is more like the seed money you plant into the right portfolio. Then most important factor is the time. You need to have enough time to grow your money. Of course, we will see the rate of return. We can help you to achieve certain rate of return. For example, 8% pretty much is like a balanced portfolio. But this line is not as smooth as this. Just remember that the market's ups and downs, ups and downs. But we will say average return, eventually your money still grow in the long run. And our goal is also try to help the clients to beat the inflation. Nowadays, the inflation we see last few months growing from like 5%, 7%, 8%, right? So we would like to help the clients say, well, at least beating the inflation. And also when they withdraw the money, there will be tax advantage. And that's the real wealth you can keep for yourself. So look at the long and big picture. A lot of people come to us and say, oh, I never ever invest anything. So how the market really looks like. So I would like to show everyone the big picture. This is from 1934 all the way to 2020. So it doesn't matter where you invest your money, you will see the trend is going up, right? So let's say the inflation is 3%. 1,000 back then, 1934. Now you need to have 18,000 to be able to purchase the same amount of goods. Why? Because the inflation there and the purchasing power is decreasing. That's why we say, well, we could not just say, well, the wealth is the money sitting in my bank. No, it's not the balance. You need to use the money as the seed planted into the good places. For example, you plant this 1,000 into US stock market. So 86 years, you see, wow, when you retire, maybe you already forgot there's a 1,000 there when you were born. But at the age of 86, it turned to the year 2020, you already have 9.9 million. You are super rich, right? So well, our point here is that to help you to see in the long run, the market, the trend is going up. So invest in the long term, you always gain. But in between, you will see there's a World War I, World War II, you will have a 911, you have a 2008, 2009 crash, right? But if at that point you don't withdraw your money, you still stay invest, you still will be better off. So this is why we help people to see in the long run. Next, we just like introduce to you our company. We work with many organizations. So we work with like a Bank of Montreal to open the RSP account. We also have IA funds, and Equitable also can help us to access to many funds. For example, those big organizations, big names, Franklin Templeton, Fidelity, HF, Invesco. So our strength is to really give a lot of options to the client to choose from. So that's pretty much I would like to share with all of you tonight. And then I would say, well, we are open the floor for questions.